I have a successful investment position in NEO stock that brings me over 250% at one point. And no matter how volatile the market is or how bearish the market is right now, I'm actually in at least 120% in the green right now. Oh, for real? Damn, that's crazy. But I don't care. Okay, sorry. So for those of you who cares, here is what I discovered, and it might be helpful for you if you watch all the way until the end. Now you think that I might be looking a little bit too young to be giving all of these advices, and yes, you're actually not wrong. In fact, you're right. But this channel was started not to be a financial advice channel, nor was it to be an educational channel. It was for me to share my own investment experience and my journey as well. And this also applies to crypto portfolios as well. Okay, so I won't waste your time, let's go. Okay, let's go. So for the point number one that I realized on how to generate a higher returns for your investment portfolio, number one, it is concentration. So for people like Warren Buffett, they like to encourage us retail investors to actually go for a passive investing strategy, which is to put our money dollar cost average every single month into the S&P 500. Yes, that is actually going to help us diversify very well, and it will generate us a substantial amount of returns and compounding effect over a long period of time. Not only that, it also helps us to minimize our risk as well because it is very well diversified. And if you don't know what the S&P 500 is, it is basically you putting your money into an index that tracks the US top 500 companies, and that sounds very good, right? But as good as it sounds, it might just minimize your returns because not every single company can do as well as one best performing company. Let's just say Apple is gaining about 10% for today, right? Not every single company will be doing the same. So that will result in a motion of one step or two steps forward and one step back, if you know what I mean.
I have very little respect for educators who preach diversification. It's not taking a stance like 10% this ETF, that ETF.
Now don't get me wrong, diversification is always good when it comes to investing, but try your best not to over diversify your investment portfolio, be it stocks, crypto. I don't know anything about real estate, so I'm not going to say for that. So if you focus on just one company, let's just go ahead and take Tesla as an example. If you have been investing in Tesla since 2020 of January, you might have generated over 730% in terms of capital gains all the way until today. Now, if you were to follow Warren Buffett's advice, which is to invest in the S&P 500 since January of last year, in the 2020. Now, I'm not saying Warren Buffett's advice is not good. I'm just saying if you're just following that strategy, you might have a capital gains of only 37% until today. Now, concentrating on only investing into just one company sounds really appetizing, really good. But don't forget that this also comes with tremendous amounts of risk as well. So be sure to evaluate your own risk before making any investment movements. All of the things that I say in this video are just for sharing purposes only. To have a concentrated portfolio, it requires conviction. Now that brings me to my second point, which is conviction. No, not the jail type of conviction.
You're playing music too loud, right to jail, right away. You're driving too fast, jail. Slow, jail.
People always say not to catch a falling knife. Now I just want to add this and make it clear that just because a stock price of a company is dropping does not mean that the fundamentals of the company have changed. We have to stop normalizing using the stock's price and evaluate the company's performance. It does not always reflect the company. The only reason why I'm able to generate such a high return for me in my investment position into NEO is because I'm buying the stock no matter the highs or the lows. Now, to buy the highs or the lows and to hold the stock, whether if the stock is going up or down, it requires a control of emotions. Which brings me to my next point again. Third point, emotions. So to be a good or a stable retail investor for people like us, right? You need to go ahead and control your emotions and not let that affect your buy or sell decisions. Now, this is the point that actually helps you join up the dots in this whole video and the previous 2 points as well, which is concentration and conviction. So if you're able to control your emotions, you won't find yourself FOMOing to buy certain stocks at the top of their price and selling at the lowest price possible. And you will also find your stock position or your buys and sell calls are a lot more reasonable. And of course, in this video, I did not include points like doing your own research or checking their cash flow of this company, etc., like this, because who would buy into a company that they do not really know anything about it? Yeah, I thought so. If you don't know anything about a company or you have not done your research onto that specific company, then it's best you just stay away from it, because if you were to go ahead and follow people's buy and sell calls in the stock market or the crypto market, what may be rational for them might not be rational for you. So that is something that I hope you guys can take away from this video. So if you're able to master these 3 points that I've mentioned earlier in this video, you'll be a pretty decent investor as a beginner, as an average investor like people like us. And then you guys can go ahead and set up some beautiful lighting, set up a camera and start making YouTube videos like how you know how to 10x your stock portfolio returns. Just like this guy. So I hope you guys found this video valuable, and if you do, definitely help me smash that like button. Do follow me on my Instagram, drop me a DM, and if you have any questions, I'll definitely reply you as soon as possible. If you want to be a part of the Discord community, link in the description box below. With that being said, I hope to see you guys in the next video. Stay safe, invest safe, goodbye.